So you probably got something in the mail recently from AARP membership offering different types of life insurance, which are usually more geared towards seniors. But with these plans, you have to read the fine detail of these mailers because there are actually 3 different plans. And if you don't know what you're getting into, this could be a major problem down the road. There's going to be a term simplified issue, a whole life plan, and a guaranteed issue whole life plan. We'll get into that here in a second. And you must be under 60 years old to enroll to any of these plans and be a member. So first, the term policy starts at $10,000 and goes up to a maximum of $150,000, which might be limited, at least for some of my clients. But if you live in Montana or New York, it only goes up to $100,000. For some reason, those states are just always hard to get coverage in. And these will cover you only until age 80, but you can choose a 10, 15, or 20-year policy to get you started, but they stop at age 80. For most seniors, this is not going to be a great choice because you want something that is guaranteed to pay out eventually. If you're going to pay these high prices, you should maybe consider like a return of premium option. Because from what I've seen comparing other companies, they're about the same price because AARP starts a little bit higher, I would say, than other carriers. One nice thing about this term policy though is that they do have a rider that will let you increase the term over the lifetime to the maximum of $150,000. So if you started a little bit low, you can increase that over time. There's just not a lot of detail online that I can find stating whether you have to do another medical exam, because most carriers, if you want to convert term to permanent, they don't make you do like a medical exam or anything like that, but they will just go by the new age and can never look at your health again. So I'm not sure if it's the same with them, because there are carriers that if you do want to convert or increase over time, they do have the option to say, hey, we need to look at all your medical again and, let you know if you're approved or denied for that. So you're not really 100% like locked in. Now, the other downside with their term policy is that it goes up every 5 years, which I think is kind of crazy. I mean, once it's, there's so many carriers out there. I mean, once you're locked in, you're locked in. You don't have to worry about this going up every 5 years. So this isn't a true level term policy. It's a bit modified. So, and this can be really rough for people in retirement, especially, or coming up to retirement, because AARP might beat a quote from like Corebridge or Foresters, Mutual of Omaha, whoever it might be. They might, depending on your age and health, they might beat it by a couple bucks. But in the first 5 years, that thing's going to go up and keep going up and keep going up. So it's like, well, should I have just started with a policy that was level? Because in retirement and Social Security, I've got my fixed income and I know what's coming out every month. So that might be a little hassle for some people, which makes me think, why are these geared towards seniors? You think that would be locked in. And it's weird. I mean, you would think, hey, if I'm going to be paying that extra, couple bucks or whatever it jumps up to every 5 years, that your coverage goes up as well. No, the premium goes up every 5 years, but the coverage stays the same. But this isn't really surprising. There's a lot of companies out there that do this, that try to sneak that in there. And I've also seen some reviews online saying that it is a little bit hard to get approved without the wait period, because I guess they're just not great with the underwriting. I guess they are, from what I've seen, a little bit strict. So if you do have a couple medications or some health conditions in the past 5-10 years, this could raise your rate a little bit or put you on that modified 2-year wait or a guaranteed issue. Now, a nice thing they do offer is living benefits, but you have to pay for that. It's an additional rider. It's not just built into the carrier. Most companies offer these living benefits for free. But also looking online, I did notice here a second ago that their height and weight chart isn't real flexible. Maybe that's why some people are maybe paying a little bit more. Now, they don't require any medical exams for seniors, but neither does anybody else when it comes to simplified term. Remember, there's traditional term, and then there is simplified. And simplified always means that there's absolutely no medical exam, but they might be a little pricier sometimes, just depending on medications and what you can and can't get approved for somewhere else. Now, looking at their whole life policies, I see that these go up to $100,000 of coverage with no medical exam, health questions only, which is pretty common in the senior whole life space. So if you're looking for estate planning, this might be a little bit limited for some people. Premiums are guaranteed to never increase, which is nice because the term coverage does, and I'm not sure how I feel about that. Now, they also have guaranteed acceptance or guaranteed issue, and as you may have seen on some of my other videos, that is the 2-year wait period. And those are usually a little bit more limited. In AARP's case, those only go up to $30,000. And remember, we want to try and avoid these because guaranteed issue just means that they're not going to ask any health questions because they're assuming, or based off what you've told them, that you are so unhealthy that you can't get qualified with anything else or anyone else. And this type of policy is much easier on agents to write, and they get paid quicker because there's not a whole lot to do. So sometimes you'll get a lazy agent that just pushes you through and says, hey, no health questions, no medical exams. Looks like you're instantly approved, Mr. So-and-so, Mrs. So-and-so. Your policy will be in the mail in a week. And you think, man, that was really easy. They didn't ask me any health questions, nothing. So you're going to tell all your friends. Well, if you look at the fine print, which most people don't, you're on a 2-year wait period. So God forbid something happens to you in those first 24 months, nothing pays out. They just return your premiums to your beneficiary. Your beneficiary's not getting $20,000, $30,000, $40,000. So that's why you got to read the fine print on these. Now, I am completely aware that this is a lot of information at one time. So if you do have any questions, write down in the description, I have a calendar link. You can book a call, 20, 30, 40 minutes, as long as you need. And I also have a quoter right below where you can actually plug in numbers yourself. It's just going to ask you your height, weight, date of birth, gender, a couple easy questions. And then from there, you can shop final expense policies yourself. That way you can shop some numbers, see some comparisons before you make any decisions. And also, as always, please hit the like button, subscribe. If you have any questions, please put them in the comments and I'll respond to them as soon as possible. Or even just give me a little thumbs up. Let me know how I'm doing. Till then, I'll see you on the next one.